So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to be covering the 4 ways you can control your trading emotions. So again, I believe that there's only 4 ways that you can control your trading emotions, and those 4 ways include the following. Number 1, experience. I can't argue with the fact that if you've been in the market for any set amount of time, it gives you a little bit of an edge up the longer that you survive and watch and experience different market environments. So I've been doing this now for over 10 years, and so I have a lot more experience than most people who are starting, though I know that there's other traders out there who have traded longer than me. But the idea is that I've seen a lot of different setups occur in very similar fashions, in very similar industries, and I've seen implied volatility expand really fast and contract really fast. I've seen markets go down fast, markets go up fast, and things just trade sideways. And so experience to me is one thing that I think does help out, because if I see a situation where a stock is maybe rallying too far too fast, I've maybe witnessed that experience and experienced it before in the past, and that helps maybe give me a little bit of a leg up on figuring out what might happen next or how I can control my emotions, because I've seen it happen before, right? So it's like parenting. When you have your first kid, everything is new, but after the second and third kid, then everything is pretty much the same. Obviously, each kid's a little bit different, but everything's pretty much the same. The same things generally happen at the same, development period as they grow and learn and develop. So you get a little bit of experience and you help control how you react to those situations. Number 2 is data. So data is really important for me. I lean on backtesting data, historical data, implied volatility data, research data that we do, that other people do. I think this is critically important for options traders, especially because if I know for a fact that using stop losses creates more losing trades, then I won't use stop losses, right? Even though emotionally it might feel like I should use a stop loss on a position because I want to cut my loss or I want to reduce the pain or stop the bleeding. If I know for a fact that during a given time period, using stop losses is not something that creates more winning trades, then I won't use stop losses. So using data and leaning on data is really, really important to me. Number 3 is having rules. I think rules are the framework for trading. Now, rules, I think people can get a little bit carried away with, in the sense that you can't have a rule for everything. There've got to be a set of framework, guidance, rules that you should follow, and everything else is more or less an art than a science, right? And so for me, rules would be no position ever risking more than 5%. Keeping 50% of my account in cash at all times, having a portfolio that is balanced to the S&P 500, having a good diversity of ticker symbols, usually about 10 different ticker symbols in various industries or sectors for every single month. So those are the kind of guidelines and framework rules that I use. And so I use those as a backstop when I get into a situation that is not comfortable or is not usual or not typical. I might lean back on those rules to make sure that I'm following my plan. And number 4 is obviously automation. So as we start to progress and as we start to get closer to the rollout of our new auto trading platform, one of the key things for us is going to be the use of automation technology. Right now, a lot of things are manual click trading, and that means that we have to interact with the markets every single time that we want to make a decision. And that, unfortunately, is not the best approach. It means that we're exposed to our emotions, to our emotional swings, to this fight or flight, fear, greed, all of these emotional imbalances in our mind. And that's never a good thing for traders. In fact, when we get more emotional, we end up trading worse. So the use of automation tools can help curb those emotional swings and use technology and automation to play off of the rules and the data that we know generally works. So again, that's number 4 is automation. So hopefully this helps out. Again, there's 4 things you can do. I think all of these things touch on different areas and aspects, but use them to your benefit, to your advantage. And as always, if you have any questions, let me know. Happy trading. Thanks for joining us on the Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on the Daily Call from OptionAlpha.com.